Imagine waking up and discovering your company just lost $40 billion overnight. Not because of a scandal, not because of bad earnings, not because of war, but because of a blog post. On February 23, 2026, IBM shares suffered their worst single-day drop in over 25 years. The stock plunged more than 13% in hours, roughly $40 billion in market value, gone. The trigger? Not a new mainframe, not a failed product. An announcement from an AI startup, Anthropic. And at the center of it all, a programming language created in 1959. COBOL. COBOL, the Common Business-Oriented Language, was born the same year Alaska became a U.S. state. Influenced by computing pioneer Grace Hopper, it was built for one purpose: processing business data, payroll, banking transactions, government records. It wasn't flashy. It wasn't trendy. It was reliable. 66 years later, COBOL still runs a massive part of the global economy. An estimated 95% of U.S. ATM transactions rely on it. Around 80% of in-person credit card swipes pass through it. Roughly 250 billion lines of COBOL code are still active worldwide. Most of it runs on IBM mainframes. For decades, that old language powered IBM's business model. The company didn't just sell hardware, it sold stability. Clients refreshed mainframes, paid annual support, and hired consultants to maintain and modernize systems. COBOL wasn't outdated, it was profitable. But there was a growing problem. The systems worked. Banks trusted them. Governments depended on them. The issue was people. Fewer developers understand COBOL. Graduates learn Python, Java, AI frameworks, cloud systems. Very few want to maintain decades-old banking infrastructure. A talent bottleneck formed. During the pandemic, several U.S. states struggled to update unemployment systems, not because the code failed, but because they couldn't find enough COBOL programmers. And modernization wasn't easy. Rewriting code wasn't the hardest part. Understanding it was. Consultants spent months, sometimes years, mapping dependencies and decoding undocumented business logic buried in millions of lines. That analysis phase alone justified huge fees, and that's where Anthropic aimed. In a blog post, the company claimed its AI system, Claude Code, could automate the hardest part of COBOL modernization. It could read thousands of lines, map dependencies, document workflows, flag risks, extract business logic, translate code into Java or Python, even generate tests. What once took years could, they claimed, take quarters. Their argument was simple. Modernization is expensive, not because rewriting is hard, but because understanding old code is hard. And AI makes understanding cheap. Investors didn't wait for proof. IBM fell 13.2% in a single session, its steepest drop since 2000. February alone saw shares down over 25%, and IBM wasn't alone. After Anthropic revealed more AI security tools, cybersecurity firms also dropped sharply. A major software ETF had fallen more than 27% that year, its worst quarter since 2008. The pattern is becoming familiar. An AI breakthrough is announced. Legacy tech stocks fall. Because this isn't just about COBOL, it's about disruption. IBM earns recurring revenue from hardware cycles, licenses, and consulting tied to mainframe workloads. Its strategy wasn't to kill COBOL, but to connect it with modern tech, exposing programs as APIs, integrating with cloud and AI systems. But if external AI tools automate code comprehension and speed up migration, multi-year consulting models shrink. When projects that took years take months, margins compress, pricing power weakens. Markets reprice risk. There's a broader fear behind this reaction. If AI can write, analyze, test, document, and secure code, what happens to traditional development tools and legacy IT contracts? IBM's crash wasn't just about a language. It was about the possibility that AI shrinks the entire market for legacy technology services. Reality, of course, is messier. Enterprise systems are filled with undocumented rules, regulatory constraints, and internal politics. Migrating core banking infrastructure isn't like rewriting a simple app. Whether Anthropic's claims scale remains uncertain, but markets price the future, not certainty. And on that February morning in 2026, Wall Street made a bet. The era of slow, expensive legacy modernization may be ending. The only question now isn't whether AI will disrupt this space. It's how fast. And somewhere, in a quiet data center processing millions of transactions per second, 66-year-old COBOL code is still doing its job. For now,